So, welcome to Coffee with Markus and Mark. In this show, we are going to talk to you about what's happening in the markets and how we are trading it. And there's a lot happening. Today's Tuesday, August 30th, and this morning, consumer confidence and housing prices were released. We'll show you what this report said and how the markets are reacting to this. Well, I'll give you a hint. The S&P 500 falls below a critical support level, so we'll take a look at this. Also, super interesting, Minneapolis Fed President Kashkari said that he's happy that the stock market crashed after Powell's comments last Friday. What? We'll take a look at this. And the two-year yield hits the highest level since 2007. Plus, we'll show you our current positions and how we are trading the markets. As you can see, there's a lot to talk about it. So we will get started in just a second. But if this is your first time here, I'm Markus Heitkoetter. This is my head coach, Markus. And we are real traders who trade live accounts. And we got a lot of trading experience. And we are showing you how we trade these crazy markets. Trust me, we know our stuff and we're not afraid to tell you like it is. And if you're looking for some honest insights into the fascinating world of trading, then you are in the right place. All right, Mark, let's take a look at the markets here and then what is causing all of this. So today, the S&P falling again.
Yeah, interesting, Markus, because yesterday was a down day, and it was a bit of a pause from what we had before, with it being Monday after the weekend. Friday was a big down day, and the markets kind of settled right around where they opened, but they gapped lower. Now, today, we actually opened higher, and so we were off to a slightly positive start, and then this move lower just accelerated recently over the last, half hour. Although we're coming off of session lows, a real sharp decline.
Yeah, but I said yesterday, pretty uneventful. And then this morning, even looked like indices were pulling up. But then we had some major economic, I want to say major economic reports released. So we had the housing price index. That's usually nothing that moves the markets. And it came in much lower than expected, which is good. It means that the real estate market is cooling off. And this is super delayed. I mean, that's being released 60 days after the month ended. So this is for June. So, I mean, this is not really what is moving the markets. But the big one is the consumer confidence and the job openings that were released an hour ago.
Yeah, and this is interesting because we see that the consumer confidence was up. 103.2 was the reading there. The forecast was 97.6. So it was expected that consumer confidence was going to be coming in higher. But actually coming in this strong, combined with job openings being much better than expected, this in theory gives the Fed more ammunition to be raising rates and not worried about the impact on the economy in doing so.
Right, because I mean, usually a good report would mean that the stock market should go up. This means that we are not in a recession, as some people say. But this were, again, right? I even have my mug here. Trade what you see, not what you think, right? Because whenever you start thinking in these crazy markets, yeah, I mean, it's upside down because basically it's exactly what you said. The economy still seems to be strong, and therefore the Fed is probably going to raise interest rates more aggressively. So let's take a look at this. And this morning, traders are factoring in a 76% probability for a 0.75% hike, a 75 basis point hike. So definitely right now the scale is tipping towards 3/4.
Yeah, and this would make sense. I mean, it's not there yet, but I wouldn't be surprised if we, over the next couple of weeks, if we see this trend continue, for the 100 basis point probability to start popping up. I mean, that would be aggressive, but at the same time, if the jobs are there, if the economy is still, strong on paper, the Fed wants to just crush this inflation, and they want to do it in a methodical way. But if the economy is saying, hey, we can be more aggressive, why wouldn't the Fed be more aggressive with raising rates to combat inflation, right?
Right, especially after Powell said on Friday, and this is what caused the massive move on Friday here, that he is willing to inflict some pain into the economy. And if you look at reports like this, there's no pain in the economy at all.
Not yet. Not
right?
yet.
So this is where I see. The only thing is they have to be a little bit careful that they're not overshooting because I mean they raised interest rates now already, well, quite a few times. So we are now at a point where we are moving out of this neutral territory into contraction, and we just need to see that they're not overshooting it. But
True.
right now, yeah, look at this. Also, 70% probability of a rate hike in November for another 0.05%. So they're not slowing down anytime soon. At least that's not what traders are expecting.
Yeah, 350, 375 basis point target for November. That's interesting. Do you remember what it got to after the housing crisis?
I do not. I do not. We'll
Yeah.
have to
Well,
look it up
actually,
and we'll let you
sorry.
know
I
tomorrow.
meant before. I meant before. But anyway, yeah, rates, rates, rates. That's what it's all about in the Fed right now.
Yeah. And I mean, right now, the 2 year yield, if you look at the 2 year yield, this hasn't been that high. We have to switch to a weekly chart so that we see where we are right now. Look at this. I mean, the 2 year yield hasn't been as high as it is right now since 2007. That is before the housing market crashed.
It's interesting. Yeah, I even I logged into my American Express account. I have some accounts with them, and I saw an ad for CDs, and I was just curious. And CDs up to 3%. Well, go figure, right?
Right. Yeah. So that's crazy. So and I mean, this is where right now the S&P, as we said today, is getting crushed based on this report. I mean, at first it came out and there was not a whole lot reaction to this, but then I said in the last 30 minutes, it accelerated really, and we were moving down. Especially, did you hear this that the Fed President Kashkari, the Minneapolis Fed President, said that he's happy that the stock market crashed on Friday?
I saw the headline, but I didn't read into the story. What's the deal there?
No, he basically said, listen, we will be more aggressive, although he's not a voting member. So I don't know if he needs to get some press time here. But that, for me, was a really surprising comment. It just shows that the Fed is determined to do whatever it takes to take inflation down, even putting the economy into a recession.
It Inflation's gone crazy. That's for sure.
Yeah. So let's talk about this critical level in the S&P 500. We talked about it yesterday, right? So the critical level is here the 0.5 retracement when we look at FIB numbers. And we just briefly dipped through this. Right now, we're trading above it, but that's definitely a level to watch. Combined with the 50-day moving average, and right now we are below the 50-day moving average. Just by a few points, but enough, because the 50-day moving average would be at 4,009, so 4,010, and right now we are trading just shy of 4,000 in the S&P 500.
Yeah, just we know that support isn't this magic number where everybody says, "Okay, time to buy." But here you do have this confluence where you have so many support levels that traders might be looking at, and that's where it tends to become a self-fulfilling prophecy. If some traders are looking at round numbers saying, hey, 4,000 should hold. If some people are looking at the 50-day moving average saying, hey, this is positive if we stay above the 50-day moving average, then you have that 50% retracement level. So all of it's right around this 4,000 level. Yeah, a little bit lower on that 50% mark. But that's where we're trading right now, right? Right in that little zone. And so a substantial move below that, well, heck, we could be heading back towards June lows. If it holds up, I would say that that's a positive sign.
Yeah, because hey, what about the magic number? We talked about the magic number. So this is where let's talk about this for a moment because just doing a little bit of technical analysis here. So we did have this magic number of 4,000. What was it? 4,200.
42.31.
42.31. We're basically let's talk about it because you found this article, which I found super interesting.
Yeah. So looking back since 1950, there's never been a bear market rally that exceeded a 50% retracement, then went on to make new lows. So the idea here is that basically, if you're in a bear market and you have this drop, if we come off of the lows and it makes up 50% of the original drop, then even though we might pull back a little bit like we are now, there hasn't been a scenario where we go all the way back down to those lows. So we're more likely to stay in this range or eventually drift higher, or move on to take out those all-time highs in theory based on this data. So that's something to definitely watch. We'll have to see if we get back down to those June lows since 1950. Based on this scenario, it hasn't happened.
Right, and there's always a first time, so it could happen. But historically, I mean, also the fourth quarter is in our favor as we are heading into midterms.
Yeah.
Yeah, so this maybe even finish positively for the year.
That would be nice. That would be nice. I just pulled up August. I was curious because July was such a strong month. We were up 9% in the S&P. Right now for August, the S&P is down 3.5%, including today's 1% drop plus. So
Yeah,
looks like we'll be wrapping things up negative.
I do believe so. I don't see that already happening today and tomorrow. But hey, we have seen weirder things. So let's talk about trading and how we are trading it. So on Friday, we went shopping, and we had quite a few positions that we put in our portfolio. So gold being one of them, and gold right now it's getting lower because if interest rates are getting higher, then there's more interested in the dollar, and this would be here. No, it's not UCC. Let me go back to the dollar index. So the dollar is getting stronger, and this means a little bit weaker demand for gold.
That's what you see, that inverse relationship, because a strong dollar means you could buy less precious metal like gold and silver. A weak dollar means you could buy more, and you usually have a pretty decent inverse correlation.
Yeah.
DX1 exclamation point in
okay, yeah.
Oh, you switched it up.
Let's see. So DX1 exclamation point. There we go. Yeah. So today again, stronger dollar, and I mean the dollar. Look at this, super strong. Hasn't been that strong in. Let's go back in time, since 2002. Wow.
Interesting.
It's quite a while. So okay, let's take a look at this. So this is where gold taking a hit. Google as a tech company also a little bit lower today, but hanging in there. So we'll see. I wouldn't mind getting a sign at all in Google. Actually, that out of all the list, gold and Google would probably be my favorite. Macy's sold the 17 put, so we're good here. We have a few more days until expiration. Nvidia taking a dive this morning, so I got a sign at 195. I've been able to collect more than $12,000 in premium there. But right now, almost attacking the June lows here again.
Getting close, and but you do have some decent support in that range around 150 and lower. So
We'll see.
I think that we just need a little of this sell-off out of the way, but I agree, getting assigned on some new trades. I would love to be assigned Google, then start selling calls.
Yeah. So TPR, I mean, TPR budging the trend here today, still up 0.54%, so up 0.5%. So, I mean, we talked about earlier, and let's just take a look at United Airlines. So here, attacking the 35 level, but it has hold, and we sold the 35 put, so we'll see what happens here on Friday. But so my ideal scenario would be getting called away in TPR, so being able to possibly sell calls maybe tomorrow, getting called away, and then getting assigned in gold and Google. I think this would be my dream scenario.
That works for me. And so a little more downside this week, and then a nice kickoff next week after the holiday to be able to sell some calls.
Yeah, that would be nice. Lots and lots of symbols on the scanner here this morning. I mean, we have with our filters 36, and there were quite a few that were pretty interesting, right? I mean, we flagged quite some as maybes here. We didn't take them because right now we are full in our portfolios. We like to have 5 or 6 positions, and as you can see right now, I have 6 positions in my portfolio. But AMAT, not bad, right? So that's a possibility. EA, Electronic Arts, also possibility here at 122, nice strike price. FedEx, FedEx at 205. What do you think about this one?
I think that's a real strong maybe.
Yeah. And then Halliburton, right now the 2850 come up. This morning in our mastermind call, several of our mastermind members were able to catch the 28 as we were trading live together.
Yep.
And that was a good one for sure. Yeah. But anyhow, so right now with the markets falling, these are shopping days for us. So we don't mind these kind of markets at all, right?
No, a down day means there's more fear in the market, which translates into more premium, so we could collect more premium or be able to sell lower strikes, giving us a little better cushion there. So from a wheel perspective, this is exactly what we like to see to add on trades. And Friday, yesterday, and today, all good days to be adding new positions.
Yeah, and so we're not afraid of getting assigned at all, because if you look at my profits for this year, selling puts, let me see if I can zoom in here a little bit. So selling puts, I made $66,000, so just a little bit over $66,000. But then selling calls, I was able to add on another $42,000. And if I would have never gotten assigned, I would not be able to sell these calls, right? That's what we're looking for.
Absolutely. And you see that your assignment rate's at 36%, right?
Yeah.
So sometimes it can be a little uncomfortable to get assigned, because if you're selling puts below the market at the time when you put that put trade on, then the market needs to fall for you to get assigned. And when the market falls, the option that you sold actually goes up. So you see a net an unrealized loss on that trade until you get assigned. So I understand that sometimes for new wheel traders, it can be a little uncomfortable, but that's why stock selection and strike selection is so important, and why we are absolutely comfortable getting assigned when we've made the decision to sell those puts.
Absolutely. Hey, talking about stock selection, I did a video on this of how to find the best stocks for the wheel, and I'll link to it here right now. Take a look at this, because this will help you tremendously so that you're picking the right stocks, that you're not afraid of getting assigned and then selling calls. All right, that wraps it up for today. We'll see you tomorrow, and we'll see what these crazy markets are doing and keep you updated on our positions.
Happy trading, everybody.